Okay, guys, in this podcast episode, we are going to be discussing the BRRRR strategy and why or why not it may not be the best strategy moving forward in a hot market or in today's market. So we're going to actually break it down, and we're also going to just talk about, the BRRRR strategy in general, why we would like it, why maybe we wouldn't like it, when we would like it, when we wouldn't like it, and then why you should pick it, or why it might be an option for you or a strategy for you. So we're going to kind of pick it apart. We're going to kind of break it down for you. And we're going to talk about when and where it applies in specific markets and especially the current market.
Yeah, well, I like what you said there about in a hot market.
Yeah.
I want to break that down. This is not a hot market. This is like a super hot market.
Yeah.
Like, this is insane what's happening right now. It's a very abnormal situation. So we're going to kind of break it down from that angle, right? Like this specific market in Southwestern Ontario, and then we'll touch on maybe how it might apply to other markets. But Dan, have you ever heard of the term Occam's razor?
I actually have not heard of that until you brought it up before we started.
We chatted a little bit about it, but I just stumbled across this definition, and I thought it really applies to real estate. Okay, so here's the actual definition of it. A law. Well, let me see this. Okay, a problem-solving principle that entitles that entity. Okay, let me break that down again. Okay, so a problem-solving principle that entities should not be multiplied without necessity. Now that doesn't really make sense, but in more simple terms, it basically means that the simplest explanation of something is usually the right one. Mm-hmm. And what I think happens in real estate is, like, if I had to break down real estate investing into one simple phrase, buy good properties in good locations that cash flow positive and hold them for long periods of time. Mm-hmm. It's too simple for most people to accept that. We tend to have to complicate things, right? I think we actually have to. I don't know why we do that. Yeah.
I don't know why. I've never understood why people try to overcomplicate real estate, because it's pretty simple.
It is.
And I've never actually tried to complicate it.
I think I know. Yeah, maybe you haven't. I did, like, when I first started, because it seems when something seems too easy, the complicated explanation or the complicated strategy seems more likely to make you more money more quickly.
Probably,
right?
Yeah.
If it's too easy, well, everybody can do that. No, I got to do the more complicated thing, right? And it's the same thing in the stock market, right? You can make a lot of money in the stock market by just buying good companies and holding them.
Yeah.
But people can't do that. They have to trade. They have to day trade. They have to swap in and out. They can't just hold a company for 20 years. They
might also be impatient people, right? People want to they want to be a millionaire overnight.
But that's my point. The simple explanation, if you want to get wealthy, is buy and hold for long periods of time.
Yeah.
That's it. But then when you start to do research on investing, you're going to find all these different strategies that are more complex. And BRRRR is one of them. Yeah. It's not that complex, but it's more complex than buy and hold. Pull your money out quick, do this, whatever. You can buy more properties more quickly.
Yeah.
And that's fine. So I really want to apply that simple strategy to any investment idea. The most simple freaking strategies are the best, in my opinion. So we wanted to apply that to that comment that we got on one of the YouTube videos.
So I'll read off the comment. So in this video, we actually break down very quickly. We barely really even touched on the BRRRR strategy, but what we really did was we kind of broke down the fact that in like a white hot market, when you're doing a BRRRR, you might actually be setting yourself back a little bit, because the market's moving so quickly that if you have funds tied up, or you're only able to do one property at a time, or even two or whatever, the market's appreciating so fast that by the time you're completed that BRRRR strategy or that BRRRR property, whatever you want to call it, the market might have already appreciated multiple times, where you could have picked up multiple properties in that given point of time while not having your capital tied up. Because
and
a lot of
two properties appreciated.
Exactly. So this guy's question was, if the market appreciates 15%, wouldn't your BRRRR also appreciate 15%? BRRRRs don't always have to be complete guts. And I agree with that. Mm-hmm. But we're talking about more like throwing on some paint isn't like a BRRRR. to me. Like, that's not like, we're talking about like one of the, you know, correct me if I'm wrong. I'm not like a fucking expert on all these bullshit acronyms that I keep hearing people throw all over the place all the time. But one of the words in that is like, what is it? Renovate or rehab or whatever.
Yeah.
Like a renovation isn't putting paint on a property. A renovation isn't, you know, changing a toilet out. Like, that's not what a renovation is, okay? Like, a renovation is like, I consider a reno like a decent amount of work going into this. And to do a decent amount of work, you're weeks, couple months, whatever, right? So by the time that happens, you know, and at the rate that the market's appreciating right now, what is it, like 10,000 a week right now? Something like that?
In a lot of cases, yeah. Like,
in
honestly,
our
if
market
I had to
here.
throw out a number, that's what I would say is happening right now.
So by the time you're completing that BRRRR, you've got all the money locked up, because what a lot of people don't fucking realize is that, I'll give you an example, RBC. I do a lot of work with RBC. You cannot buy a rental without having income on that rental. So a lot of people, what they don't actually realize is, like, so this is once you start kind of like developing a portfolio. So right now you can only own 5 residential properties in your name or personally, right? A lot of banks won't allow you to go over. Maybe some, you know, credit unions will or whatever. But right now, for example, for me, if I go out and buy a single family home or whatever, I have to have income on that property or I'm fucking paying cash. They want to see income on that property. So all of a sudden, I got to pay cash for this property. My shit's going to be tied up for 6 months if I'm doing like a really big rental, or 4 months or 3 months or whatever. How fast is that property appreciating within those 3 months that where my shit's all tied up? So imagine I don't have to tie up $400,000, right? Imagine I don't have to do that. I'm only tying up 100. Maybe I can get 4 properties in that amount of time. You see what I'm trying to say?
Yeah.
So that's what we're trying to talk about, where we're saying like the market's moving too fast for us to want to tie up that much capital in a BRRRR, that much capital, that much resources, that much time and effort. Like, this is like, a lot of people don't like apply like the time and effort factor into this.
Opportunity cost.
Exactly. Opportunity cost. That's what we're talking about.
So yeah, even if you didn't have to buy it cash, let's say you did get it financed by the bank. So you still need the down payment. Let's say 20% of 300 grand, that's 60 grand plus closing costs. Then you have to fund a $50,000 renovation. So there's potentially 2 down payments on 2 separate properties that you could do.
And then the market's moving so fast, might be advantageous just keep an open variable on your property, so that if the market's moving super fast, refinance
in 6 months or a year.
Exactly. And you get more money out. You're almost kind of like where you were with the BRRRR.
Yeah.
You know what I mean?
But you didn't do any work.
But you didn't do anything. You know what I mean?
Yeah. So I think the danger is when you're taking a strategy and limiting yourself to like, that's the only way I can do it, because that's what the YouTube people are telling me. It's got to be a BRRRR. Everything else is too slow. And I'm over here like, well, maybe in most markets it's too slow, but right now it's not too slow because the market's appreciating at 20 to 30% for the past 3 years. Now, again, I've been telling people this for a while, like, you don't have to do a BRRRR right now because of the market. So stop trying to apply that general philosophy. Now, I know what people are doing as well. They're seeing the YouTube videos. They're seeing people go on there and say, oh, I just did this BRRRR in Windsor and I made this amount of money. I pulled out all my capital in 6 months.
Are there actually YouTube videos about it, like in Windsor?
Yeah.
Really?
I just hear about them. I don't watch them. But
I've never fucking seen. I don't go on YouTube really that much, but I've never even seen.
But what those people on YouTube don't tell the public is that, well, their rehab added X amount of money, but the market did a lot of the work or did most of the work. And I also. My property appreciated 100 grand in that time period as well. But guess what? I didn't do any work to it. The market did it.
You want to know something that a lot of people don't actually realize? A lot of people actually don't realize that the actual return that at this point in the market, it's so fucking hot right now. If they were to throw $50,000 at a reno, the return on the reno, I fucking guarantee you, is actually less if they did fuck all, let the property appreciate and pop it back up on the market. Guaranteed. People, you might even be able to get the same amount. I've seen shit, the exact same fucking house down the street that I own, okay, or that I, very similar property that I actually own, go for the exact same as another fucking property down the street that was like renoed decently. Like it's not mattering that much
within weeks or
exactly.
Or a month or 2 months.
It's not really even.
It's
not mattering that much anymore. People are just getting in to be in the property. Like the finishes and all that shit are really starting to matter much less in a white hot market. It doesn't fucking matter.
People are desperate for housing.
100%.
So
I actually had a scenario in one of my properties right now. We were going to throw like about 40 to 50K at it. I said, fuck it. There's no
don't
point.
have to.
Yeah, you don't even have to. I said, fuck it. We did some paint and that was it. One day. Had a painter go in, one of my guys go in, fucking paint the whole thing. That's it. Done.
Yeah.
And I guarantee you I can get exactly the same fucking money as a renovated home, decent, down the street. And if not, probably, a little bit less because it's not fully renoed. But someone's gonna fucking pay almost full up for it because you can't fucking get anything. So that's the opportunity cost in a white hot market like this. It doesn't fucking make sense sometimes.
And people are not. They're not understanding the market. They're not willing to adapt to what's happening in the market and come in with a different strategy. Now, again, don't rule out the BRRRR, but there's plenty of other good opportunities that are going to make you a bunch of money in the same period of time. And again, when you're just doing a lipstick renovation, the average investor, especially if you're out of town or a beginner or something, you don't have enough margin to really do a BRRRR.
Yeah.
So you don't, like when they say rehab, I'm just going to throw a coat of paint on it. You have to find something that needs a significant amount of work or is like tenanted with bad tenants and you're going to have to deal with the tenants. Like you need to assume a problem to get enough of a discount in a white hot market to actually do a BRRRR to begin with. So I guess this is a way to open people's eyes of just not coming in with that blanket only BRRRR.
Yeah.
Because I think you're missing what's happening.
Where do you think that comes from? Like, where do you think that actually is like mostly like a social media thing, YouTube thing?
It's Bigger Pockets. I'm a big contributor on Bigger Pockets. I'm on there all the time. Yeah. That's how I got started. And when I was on there as a beginner, all I would read about is the BRRRR strategy. But guess what? Bigger Pockets is a US based site.
Yeah.
Different. You can go do a BRRRR a lot easier in freaking Cleveland, Ohio, where properties sit on the market for 3 months or this market or that market. But that BRRRR strategy doesn't apply to every market. So if you're firm up on going and doing a BRRRR, go to a different market then. Fine. But we talked about this last week. There's going to be a trade-off. If you go to a market that's dead and you can more easily negotiate a deal, okay, you might BRRRR your money out quicker and maybe you make a quick 50 grand, but I just made 150 grand because Windsor's white hot. Yeah. Or Southwestern Ontario.
So let's get into why and when a BRRRR strategy would work.
Well,
and would it still and how could it still work in today's market, and specifically say Windsor or any kind of white hot market?
So if somebody comes to me and says, "Hey, I'm a contractor, like I have all the skills." I have a couple clients that are like they know what they're doing, and they're here and they come and do the work. They drive down and they can do they can bang out a rental and
like they're out of town.
Yeah, they drive down on the weekend. Like one of my clients and his dad, they come down and they can bang out a renovation in a month, a month and a half, and they're experienced. They've been doing it for a decade.
Yeah.
Okay, let's find you a BRRRR.
Yeah.
And
a BRRRR is not like they're not coming down here painting and then popping around.
No, we're talking like full
full reno, walls, opening walls.
Yeah. They've
doing
inherited a major problem.
Yeah.
They've inherited a bad tenant. They've got the tenant out. The place is it was a hoarder house, like whatever the case is, right? Yeah. Because then they've got a discount and they've got enough margin to work with. For you, let's go find you a BRRRR. But John from Toronto, first time investor with 70 grand to invest, and he's going to hire somebody to do the renovations, and he only wants to do a light lipstick job, maybe some flooring and paint. Sorry, bro. Market's too hot for you to do that. Now and then I'll present another opportunity. I'll say, guess what though, man? You buy something now, it's going to be worth 60 grand just in market appreciation by the end of the year. That's a safe bet right now based on what's happening. There's not enough houses.
Yeah.
No, it's got to be a BRRRR.
Yeah.
Well, you know what? Because of your situation, I'll try to help you, but like you're going to be on the sidelines for 6 months, man. I see it all the time.
When you could have made the $60,000 that you
60
wanted.
Grand. And you could, and not only that, but like you could have started building your portfolio and building wealth. Yeah. That's the key, right? It's not about the 6 months. It's about like start your portfolio. Like you got to start. Now, if you want to go to like, I don't know, Prince Edward Island and go do a BRRRR, cool, man. But if you want to partake in like Southwestern Ontario, which has incredible, some of the best fundamentals probably in the world for real estate, I'm guessing. Not enough houses, hundreds of thousands of immigrants, a lot of wealth, tech. Like Southwestern Ontario is a really solid place to invest. Socialist government, very strong fundamentals. Then you have to adapt to our market, or take less appreciation and go somewhere else and do a BRRRR, right? And take your quick 50 grand, but you're going to miss out on some other.
That seems to be the key, is understanding expectations for specific types of strategies.
Yeah, let me break this down into stock perspective. Okay, let's take because this is a lot of people that do invest. I know you don't like stocks, and I don't blame you because they're not as good as real estate.
Not that I don't like stocks. I don't.
You don't like them.
Fair enough.
They're not as good as real estate.
No, they're not as good. I don't have control.
You don't have leverage.
You don't have leverage.
But let's not get too much into that. Let's give an example. Okay.
Yeah. Go.
I buy stocks for different reasons. I buy Amazon stock. I bought it 5 years ago for freaking $600 a share. Now it's $3,200. 6 times my money or whatever, 5 or 6 times my money. I bought TD Bank and CIBC stock because they pay a 5 or 6% dividend. That dividend is nice and safe, and it's whatever. But I've only made let's say 30%, maybe 45% on my dividend stocks because they don't appreciate that quickly. Amazon stocks, I made 600%. So you have to understand the trade-offs. If you come and invest in Southwestern Ontario, you're going to get a lower return, right? Let's say you get a lower cash flow. But the appreciation is so crazy right now because of the fundamentals, not because of drama, because of the lack of supply and the increased demand, that there is going to be a trade-off. Now, I'm not suggesting you should do one or the other. I'm a high-risk guy. I'm willing to take on an abundance of risk because of my age and my tolerance. I want that appreciation. I want to be... I want Amazon stock. I want the next Amazon stock. I'm willing to bet on that. I'm willing to bet on, Windsor's, in my opinion, Windsor's it's part of the GTA now. I want to be the next part of the GTA, London and everywhere else has been. I want to be here. I don't want to go invest in Chatham. I don't want to go invest in Prince Edward Island. I want to take advantage of what the heck is happening here. Windsor should be a great city.
Yeah, it should.
Do you not agree?
For sure, of course. That's why I started, right?
Exactly. You've been saying it for a long time.
I fucking knew it.
It's Windsor's, and I kind of...
Windsor had the recipe to be a great city, and nobody saw it. Nobody thought...
it has the ingredients, just we needed a chef or whatever to come in and put them together and whatever.
So what kind of market are we talking about where a BRRRR strategy actually would work, and when would it work, and can it work in today's market?
Well,
so let's talk about those. And
it can work in a slower market a lot more easily.
For sure.
It doesn't have. I'm not saying a dead market or a down market, but if the market was slower,
the reason why you're doing a BRRRR strategy in a slower market is because you're forcing the appreciation.
Yes.
That's what a lot of people don't understand. Why are you trying to force appreciation so much in a white hot market? Because you almost don't have to.
Because they don't understand what's happening, in my opinion. They don't understand it, and they're unwilling to listen and accept it.
Yeah, exactly. The BRRRR strategy is literally forcing appreciation. Okay, you're doing something to increase the value of the property.
Well, what's forcing the appreciation now?
Exactly.
The market conditions.
The market, yeah.
The lack of supply.
Exactly.
And insane white hot demand coupled with social policy, immigration, and a lot of wealth that's been generated over the past decade.
I'll give you an example. The BRRRR strategy is literally what I've done in order to help force appreciation and build my portfolio when the market wasn't white hot. So as the market has become white hot, what have I done? I've reduced the amount of renovation costs, expenses, all that bullshit. I've reduced it. So I don't have to tie up my capital as much for so long. So I'm more liquid for when an opportunity comes up, I can get it. And I can get more doors. So that's what a lot of people don't understand. You're forcing appreciation when appreciation doesn't need to be forced.
Yeah.
It's already forcing itself because of the market conditions.
Yeah. And you want as many doors right now
100%
in Southwestern Ontario as possible.
For sure.
As quickly as possible.
Exactly. And the BRRRR strategy actually doesn't...
It can slow you down.
It can slow you down.
This isn't for everybody.
Yeah, unless you have who knows? Maybe somebody has a shit ton of capital that they can just go buy 10 BRRRRs and do them simultaneously. But a lot of people don't do that.
So this isn't a blanket anti-BRRRR. This isn't and you have a construction crew.
Yeah.
And you have plenty of capital to go do multiple projects and not tie everything up.
I mean, I'm still fucking the problem is you still are limited. I'm still limited, right? I'm still that fucking apartment building that I bought downtown. I'm going to be limited for that. You know what I mean? It's going to tie up a lot of capital.
There's an opportunity cost.
For sure. There's an opportunity cost. It's going to be a shit storm. I'm adding another floor on it. It's a fucking going to be a disaster. But the return is going to be great. And I always wanted to kind of take something like that on. Right?
And residential units in Southwestern Ontario is never a bad idea.
Exactly. But it will
There will be a trade-off.
There's going to be a trade-off. It really will. But it's almost kind of like, that's more development. That's not reno. I'm developing residential in a commercial building.
Yeah, like zoning changes.
Yeah, it's a little bit different, right? But right now, from my perspective, would I be doing heavy BRRRRs? I wouldn't. I actually wouldn't. I would rather do very light renos to get something rentable. That's it. To get something rentable, and then not even, because you almost don't even have to. There's such a what I am noticing though, Scott, is the rental market is actually softening a little bit. I actually have noticed that.
I have some
in the area.
I have some anecdotal experience with that, and I have not experienced that.
You haven't seen that, eh?
Like none.
My properties that are
at all.
for rent are sitting a little bit longer right now, and I have a feeling it's because a lot of investors are coming into town, and there's a lot of shit on the MLS for rent in the area. Now, I could be wrong. I don't know. That's what I'm hearing, and that's what I'm seeing. I do have some property sitting on the market a little bit longer than usual, like a little bit longer than 4 to 6 months ago. It would have been gobbled up right away.
True.
Right now, it's not being. So in that kind of strategy, what I'm doing is I'm going in lipstick, right? Very light lipstick. And then I'm putting it back up on the market and it's working. So I'm not going in like a super deep reno though.
Right.
Yeah, because the BRRRR takes too long right now and the fucking market's too hot.
Yeah.
I need to pivot as quick as possible, and you can't pivot when you got a fucking BRRRR strategy. I'll give you an example. Somebody that I'm loaning money to right now, or funds, I think it was like back in October that he's trying to do a reno, a big reno, waiting for permits.
The basement rental?
Yeah, waiting for permits right now. He just got his permit like a couple months ago, and it took him like fucking 4, 5, 6 months to get it. You can't, that's not, it ain't gonna work in this kind of market.
Now, what he may or may not understand, or people on the outside, is that in that 6 months, the market just appreciated, the average property is up 50 grand.
For sure.
Easily. So you could have, you just cost yourself potentially 50 grand.
Yeah.
But
Absolutely.
whatever. So
It is
now,
what it is.
I would have said to anybody 6 months ago, I would have said, hey man, just buy and hold. And I was saying it, you can read anything that I posted, just buy and hold.
Yeah.
So people understand the opportunity cost that comes with these things in this particular market in Southwestern Ontario.
So let's get into the type of person that would actually benefit from doing a BRRRR is more than likely somebody that has construction knowledge, which, in all fairness, this individual does have actually construction knowledge. I have construction knowledge. So somebody that has construction knowledge and has enough capital not to hold themselves back from the other opportunities in that would afford themselves the opportunity to increase the number of doors, thereby increasing the appreciation overall in their portfolio to dramatically, scale it.
Yep.
I think that would be the key for somebody looking to do still a BRRRR.
Local investor, experience, probably doing the rentals yourself, or at least managing the project yourself, so you can keep the cost down.
Yeah.
Probably taking on more than average level of problems, so you can get enough of a discount
For sure.
to actually have enough margin to do the BRRRR. And in general, just understand what's happening in the market and bring that understanding here. Don't come with, especially as a beginner, don't come here it's got to be BRRRR and not understand what's happening in the market.
I also think something what I'm doing where I'm developing residential from commercial. I think that's also a good strategy. If somebody actually has knowledge, that would be a good strategy to get into, because there is a housing shortage in the area. And when, anytime you can create more residential is a good scenario.
The next wave of investment is going to be what you're doing, residential conversions or auxiliary dwelling units or basement conversions, which are super hard to find. But the auxiliary dwelling unit, like a second house on the back of a lot, is going to be the next wave, because everything else is getting too expensive. So get ahead of the curve for sure if you're going to be going
basement
down that road.
units, whatever.
So I guess I don't know, to sum it up, to revisit Occam's razor. It's very simple. Real estate's super simple. Buy good properties, hold them, cash flow positive, build a portfolio over the next 10 years. Do you know how many people I talk to that are selling their properties right now? And they think that they're long-term investors. You're going to make 50 grand or 100 grand, but you're going to leave $1 million on the table. How can you build wealth if you don't hold the asset? How can you build wealth if you sell the golden goose? The golden goose is laying you an egg every month for the rest of your life. You're selling the golden goose for 50,000 eggs, but it would lay you $1 million over the next 20 years. So people are just, they can't take the simplicity and apply it to real estate. It's got to be faster. It's got to be. It's got to be this strategy. It's got to be fast. I got to go, and then you end up never being wealthy. You know, there's a difference between rich and wealthy. Wealthy people have assets, and the assets work for them. The assets work so they don't have to. Most people still work, but they don't have to.
Yeah.
Like, how many assets do you have right now making you money passively? Like, you have a couple hundred properties, you have several businesses. Right now, you're making money. Now, if you would have sold, like, let's say over the last decade, you were just selling everything off consistently. Well, yeah, you got a bunch of money, but you have nothing working for you anymore.
Yeah.
People are sacrificing the long term
For sure.
for the short term.
And then that's what I
Overcomplicated.
I'm not going to toot my own horn, but I was like, at some point, Windsor market is going to pop because it's at its lowest it's ever been. There's only a way up. You can only go up from here.
But also, man, like you must see the value of holding these assets forever.
Of course.
Like,
for
you're
sure.
always going to own.
The only time I would ever sell, I'm currently like probably going to offload a few, is to raise capital for other very large products.
Let's talk about a few times when you want to sell. Raise money for a bigger, better project or a higher return.
That's it.
Bad tenants that you just can't get rid of unless you sell because they know the game. You can't get them out. Or you basically own something in a location that's just giving you too many headaches and you just want to get rid of it. But you're going to take that money.
I'll give you another one too. When you have a property that isn't returning the amount of
below
income,
market rents,
below market rent, and you can't get them out. I have so many properties like that simply because I have great tenants and the market has literally appreciated so fucking much
for rents.
For rents, I can't do shit. I literally can't fucking take anything out of these properties.
You're literally 50% below market
100%.
rent.
Exactly. So in that kind of scenario, literally, I'm not even joking. Like, I literally have so many properties that are literally worth like multiple times than what I bought them for. And I can't do fuck all about it because these people are not leaving. Ontario has, rental increase,
0% this year.
Yeah, exactly. Yeah, 0% this year. So I'm limited to that. So I'm fucked.
Yeah.
So at some point, my money isn't making me money.
Yeah.
Right? Because there's equity in there that I can't make any money.
So there are a few times when you want to sell, but
the
general mindset of an investor or a business owner is you hold those assets, you hold those golden gooses that are laying you an egg every month. That's how you build long-term generational wealth.
And especially now in these markets, like you want to hold as long as possible in markets like this. The BRRRR strategy works great, again, when you have to force appreciation. And when you have to force appreciation, it's not in a market like this. You usually have to force appreciation in a stagnant market, which is exactly what I did from literally like 2008 to fucking, I don't even know when, 2015, probably, something like that.
Yeah.
You had to do BRRRR.
And understand the trade-off. In that stagnant market, you were doing the BRRRR, but you also had no appreciation for a decade.
It wasn't fucking moving.
Yeah.
Nothing was moving.
You won. But you didn't lose, but you won on one end, but you weren't partaking in the other half.
Yeah.
So there is and was a trade-off. That's why in this particular market, like, understand what you're doing, understand the market. And again, when it changes, when it shifts, we're going to hop on a podcast and be like, hey, the market's shifting now. Let's adapt a different strategy.
Yeah,
let's do this.
Exactly. Like what you're saying. You can't just bring one strategy into a market because the markets aren't one strategy fits all. You have to be able to pivot. And the smartest real estate investors understand that, and they do pivot.
I've been buying turnkey for about 6 or 7 years, or, well, 4 or 5, whatever it's been. And like it's working like a charm. And I've gotten good properties, good locations. Maybe that's why I'm not having any problems with tenants. Like, my properties are above average. I don't own any like West End. I don't own anything in a subpar location.
Whoa, well, easy with the West End shit. Okay?
I'm just saying they're generally they're a cut above in location, quality, and everything else. So maybe like everybody's comparison shopping. Oh, this one, my properties always generally stand out.
Yeah.
Whereas Johnny Burr went to the student rental area to buy his BRRRR because it seemed like a good deal. And he's, maybe suffering the consequences
for sure.
or whatever, right?
Yeah,
so,
for sure.
Understand the trade-offs. But
understand the market, apply whatever strategy works best for that market, and don't
for you,
yes, and don't put yourself in this box where you're hearing somebody on YouTube or Bigger Pockets that are telling you, well, I made X amount of dollars using the BRRRR strategy. Motherfucker, you don't live where that guy lives, and you don't do that where he lives. Or you're not doing the right, whatever, man. Like, you're not that guy. You have to understand the market, and you have to, understand your talent and you have to apply whatever works best according to those market conditions.
Pretty simple.
And actually pay attention because market conditions shift like this.
Yes.
So you have to really pay attention. That's it.
Shift when they shift. But
Exactly.
Yeah. Okay, cool. So in sum, BRRRR strategy is not the problem. It's applying the BRRRR strategy to in a blanket way without understanding the market, and also having just tunnel vision.
Yeah.
One strategy, one size fits all, blah, blah, blah. So that's what we want to talk about.
Done.
Done. Yeah.